Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. Yesterday we examined the flat correction. And if you recall, over here to the left is what we actually looked at. It's a flat correction subdivides as a 3-3-5 pattern. We have waves A, B, C for wave A, B, C for wave B, and then once wave B is complete, you see a 5-wave move to the downside in wave C. Now that wave C can either be an ending diagonal or a straight impulse wave. Now one of the key characteristics of a flat correction is that wave B ends at or near the origin of wave A. Now there's a variation to the flat correction or the flat pattern, and that is referred to as an expanded flat, sometimes an irregular flat. And the difference is very minor. The substructure is still the same. You have waves A, B, and C for A, B, C for B, and then of course another 5-wave move or an ending diagonal to the downside in this instance. But again, the most noticeable, the characteristic or the difference between an expanded flat and a flat is that with an expanded flat, wave B ends beyond the origin of wave A. Now the question at this point, or the relevant point, would be by how much? Well, typically that's about a 1.382. Now we're going to be looking at an expanded flat in a few issues or a few stocks. The first one is going to be Teck Resources, ticker symbol TCK. Now in this instance here, from this extreme, we have waves A, B, and C, a 3-wave move up for wave A, and then we have waves A, B, C for wave B, and again at 33.69 that's where wave B equals a 1.382 multiple of wave A. Thus this is the area we would like to see prices reverse from in this instance. Now that's followed by an ending diagonal in this instance, so it's a very nice expanded flat pattern. 3 up in wave A, 3 down in wave B, and then that's followed by a 5-wave move in wave C, specifically an ending diagonal. Thus in this instance here we can actually see the price or the move actually come much lower here, because as a counter trend move we know to expect it to be more than fully retraced. Now let's take another look at an expanded flat, and this is going to be in another stock. This is Broadsoft, ticker symbol BSFT. Now in this instance here, again, notice your first move to the downside, your wave A. Waves A, B, C, and then we have another A, B, C to a new extreme. Notice in this instance though that the wave B move actually traveled a bit beyond the point where wave B equaled a 1.382 multiple of wave A at 42.21. It's important to understand that the 1.382 measurement is actually a guideline that Elliotticians use. It's not an absolute. We can actually see the wave B travel to 1.236, 1.382, or maybe even 1.618. But I will say that we'd put a limit on this. And what I mean by that is typically we do not like to see wave B travel a 2.0 multiple or higher. If you're beginning to see or if you're measuring what you think may be wave B of an expanded flat, and it's beyond that 2.0 multiple or starts pushing into that possibly that 1.786 or 1.88 area, odds favor you're not looking at an expanded flat, you're actually looking at something else. But in this instance here, again, notice we just briefly spiked above that point and then reversed. Now our final expanded flat that we're going to examine is going to be in the VIX. And that is right here. Once my price chart loads up, there we go. Notice the move here. 3 waves up in wave A, followed by a 3-wave move down in wave B. At 37.29, wave B equals a 1.382 multiple of wave A. And then that's also followed by an ending diagonal to the upside in wave C. Now one thing to keep in mind from a trading perspective, I actually see ending diagonals, expanded flats, form quite often in the wave 2 position. And the reason why is because I think it creates kind of a wash and rinse type environment in the market. And what I'm referring to is in this instance here, as prices are moving to the downside, when you see the break lower in wave B, investors or traders are thinking that the trend is going to continue to the downside. So they enter the market short, and in this instance has, say, their stops, moderately higher. Then all of a sudden the market moves back to the upside, so those people who are short get stopped out, and now you have traders jumping to the buy side because they think the market's going to continue higher. Well, what happens? They also get stopped out. So if you're familiar with futures junctures, you know I say quite often that whatever adversely affects the most people tends to be what happens most. In this instance here, you essentially see shorts get in and then stopped out, then longs get in and get stopped out, and then at that point, once everybody's kind of cleared out of the market, that's when you see the big move actually begin to unfold. Something to keep in mind. I see a lot of expanded flats in the wave 2 position, and I think that's why. Have